My name is Jason Payan and I'm a CPA in Las Vegas, Nevada. I would like to briefly discuss with you today how to quickly tell if you will have to report taxable income on the short sale of your primary residence. The Internal Revenue Code is very complex, and you will want to discuss your individual situation with your tax advisor. With that said, there are a few key questions you can answer that will tell whether you might have to report taxable income or not. In 2007, Congress passed the Mortgage and Debt Relief Act. While this law is currently scheduled to expire at the end of 2012, we anticipate that this law will be extended for at least 1 year through the end of 2013. In order to qualify for this law, you must meet two criteria. First, the property must have been your primary residence at the time of short sale or foreclosure. In order to determine if the property was your primary residence, the IRS will look to such things as where you received your mail, where you were registered to vote, and where your cars were registered. All of these factors must indicate that the property was your primary residence. The second criteria that you must meet is the debt on the home must have been used to either purchase the home or improve the home. This means that if you have a second mortgage, the debt must have been used to either put in a pool, put in a backyard, or somehow improve the property. It would be okay for you to have refinanced the original loan so long as you did not take out any cash. As long as you meet these two criteria, you should not owe any tax on the short sale or foreclosure of your primary residence. Now, what happens if you did refinance the property and pulled cash out? If you took cash out and did not use that cash to improve the property in some way, then you may have taxable income. The only way to potentially avoid having to report taxable income in this case is to look at whether you are considered insolvent or not by the IRS's definition. So, what does it mean to be insolvent under the IRS's definition? To be insolvent means that when you add up all of your debts and all of your loans, they are greater than all of the assets that you own. If you are going to report to the IRS that you are insolvent, you will need to be able to prove it. The test on whether you are insolvent or not is conducted immediately before the short sale or the foreclosure. In order to prove to the IRS that you are insolvent, you will need to actually take out a piece of paper and on one side of the page list out all of your loans and all of your debts. This would include such things as credit card debt, the mortgage on the home you are about to short sell, and any car loans, student loans, or any other debt that you might have. On the opposite side of the page, you will want to write down all of the assets that you own. This would include such things as the cash in your bank account, the cash in your 401k accounts, any IRA accounts, any stock accounts. You will also want to include the value of the home you are about to short sell or foreclose on, and any other personal assets that you may own, such as cars or household items. As long as the amount of all of your debts is greater than the amount of all of your assets, you will be considered insolvent. However, in order to avoid taxable income, your debts will need to be greater than your assets by at least the same amount that the bank is going to forgive in the short sale or foreclosure transaction. If you feel that you may be insolvent, we ask that you actually write out these amounts and have it documented on paper before you give us a call or meet with us for a consultation. Unfortunately, we will not be able to advise you without this information ready to go. In conclusion, the Debt Relief Act should cover the majority of primary resident short sales and foreclosure situations, except if you refinance the property and did not use that cash to improve the home. If you would like to speak to one of our CPAs about your specific situation, please feel free to give us a call at area code 702-233-9526. Thank you.